Welcome to Trading Lounge and the Bitcoin report for the 17th of March. We'll look at Bitcoin and Ethereum. So we have an issue at the moment with this because the move down from the current high here is in 5 waves, moving down in this direction through here. So it's very clear that it's 5 waves. So normally what we'd be looking at in that instance is, because we've got 5 waves in the opposite direction, we would look for, well, after 5 waves in the opposite direction of the previous trend, we would look for a corrective move, and then we would look for another 5 waves down. Now, this is what we need to talk about. Do we just get a shallow 5 waves down and we go back up? Or do we get a 3rd wave coming down here further, and then a 4th, and then a 5th wave here? Because as I mentioned before, this particular correction here, the size of it is actually smaller than this one here, when in fact this label here is actually 1 degree higher than this one. So really, this correction here should be bigger than this one by about 60%, but it's not. It's like smaller by 60%. So do we go back to our original thing and have one of our original thoughts is having wave 4 over here as an A wave, a B wave, and a C wave over here? So today, I don't have any answers, but what I'm going to do is I'm going to have a look in detail at Bitcoin and Ethereum, and we're going to have a look at a whole lot of different counts that are possible. So today's more theory than anything else, but we'll also be looking at what levels are important and so on and so on. So yes, Bitcoin has taken the top out here. So that is a positive step. Ethereum hasn't, and nor has like the crypto indices as well. So this is a crypto index here as well. So in this case, we've also got a really nice 5 wave structure down here. So in this case, I can't call this wave 4 here because it's already overlapped this top here. There is a case that we could look at this as 1 and 2 and 3 and 4 and 5 in here. So wave 1 here, or A wave here, and then an A and a B and a C wave here. But still, we're pretty close here, and because we've got 5 here, we should be seeing another 5 waves down, somewhere in here, somewhere. Maybe just the 3rd wave coming down here as well, and 4th and 5th coming down into this space. But, we're going to be getting that overlap here, whichever way. We've probably got it already. Well, whatever, close anyway, whatever. So, it does appear that, we've got a problem here for this. So, let's just come back to this space here for a moment. So I don't have any opinion of being bullish or moving up to wave 5 here or moving down to wave 4, but I have to say that 5 waves coming down here really puts it in a situation that we will have a little rally like we were looking at yesterday. Because yesterday when we spoke, we were looking at 3 waves down, and we understood that we would end up getting 5 waves down. We got those 5 waves, and then we're looking for a rally to come into place here. And we either now come down a little way for a short wave C and move up. So we still go 1 and 2 and 3 and A, B, C for 4 here, and then move up without overlapping the top here. And you could also look at wave 1 being on this top here as well. We'll take a closer look at that. But or we're going to get this here. Now, because we've taken the top out here, that would put us in the expanded flat category. So there's 3 types of corrections when we've got 3 waves here. Well, actually there's 4. So it's also possible to have a triangle pattern to come into play here as well. We haven't really seen a decent triangle come into this space yet, but that's also possible as well here for this. It's not off the cards anyway, off the table rather. So yeah, the flat family, the flat correction. So I think we just need to just talk about them for a moment. So the first one, the market comes up, and then we have 3 waves down. Now that's normally part of the flat family corrections where there's 3 of them. Now, it could also be part of the triangle pattern as well, the beginning of a triangle pattern, and wave 4s tend to do that. So the regular flat is just a 3-wave move back up and then 5 waves down here. So that's just a regular flat, and it's pretty much sort of contained within this space here for this. But we don't have that because we're above here. So we've got the expanded flat where we come up here. This is this top here. We come down for 3 waves. And then we go up for 3 waves, taking the top out here. And then the next move is down here, taking that low out. So that's the trap. And we come down in 5 waves here, taking this out. So it's a bull bear trap at that point, and then we move up at that point. And the last one's a running flat, which is pretty rare, but they're around. So it's 3 waves down, 3 waves back up, taking the top out, and then a shorter 5 waves here. It's not a very good 5th wave, was it? Something like that. So it ends up sort of running in that space. So we could consider that as well here. But either way, let's just move in a little bit closer now. So on the 4-hour chart, this is what the expanded flat would look like. So the A wave down here, the A wave to here or to here, with the B wave here, not that it's a big deal. And then 1, 2, 3, 4, and 5 here for the C wave of B, down for 1 here, back to the 58,000, which is the 61.8% roughly. And we can see that it's important. We can see that it's a top here, of course. We can see that it's a top here. And so it gives us a head and shoulders in that regard there. Now, what I can say, let's just say that I've got everything wrong, and which wouldn't be the first time. So we need to understand at what point we'd be wrong. So if we got a classic trading levels pattern sitting on top of the 58 there, then we would be wrong at that point, and we would go long from that point there. Or on, if you can't figure the second high out on that high here. But we need that first high above the level. And that would be that pattern there. So if this is the 58,000, just to make it clear, we would see the arrival, the reaction, the first high above the level, then a correction, and then getting support here. So we can go long above that level, that one, or if you nail it down, you can go to this one here. But it must have support on that level, because that's where the 61.8% retracement level is at that point here, that 50-60% retracement level. Otherwise, we'll be seeing the A wave here, the A, B, and C for the B wave, and then 1 and 2 and 3 and 4 and 5. So that's one way to look at it. We've got other ways to look at it as well. So I'm not sure what I've done on these charts, but okay, so this is another way to look at it. So this is more of a bullish count here. So we've got wave 3 over there, wave 4 here, and then we've got 1 and 2 here. And 1, 2, 3, 4, 5 for the 3rd wave, an A and a B and a C for the 4th wave, up for the 5th wave here for the 3rd wave, and then 5 waves down here, B wave coming back up to the 58 roughly, and then wave C coming down. But in this case, wave C would only be 61.8% of the length of wave A here. But if this market, if this C wave came down and touched on the 50,000 here, then that would be incorrect at that point. Then we could take this count off the table. We'll eliminate it. This is another count, bit of a bit of a long shot. So wave 4 here, with wave 1 here, an A and a B and a C for wave 2, 1, 2, and then 1, 2, 3, 4, and 5 for the 3rd wave, the 4th wave here, the 5th wave up here for the 3rd, and then this move down here as the A wave, and then up for the B wave here, and then down for the C wave here. A bit of a long shot, but we'll have a look at all of this top here in more detail. detail in a moment. So it could move up from that space there as well. Now, I know you don't like me showing you all these counts and it gets confusing, but this is what I have to go through. I have to go through them all, and then what we need to do is just eliminate them one by one. And it's all started because we've got that 5-wave move down through here, which we'll also be looking at in more detail. So in this case here, this is where we were yakking yesterday. So let me just clean this up a little bit. So yesterday we were waiting for that 5th wave to come down, so that's there. And then this one here, and this wave 2 here. And we can just put this B wave here for the time being. And this wave 4 would need to come over to this space here, which I don't particularly like doing, but that's okay for the time being. But we do have a clear 5-wave structure here, so that would bring us back to the 50-60% retracement level from this high to this low. I'm sure you guys are all over it by now of this, but I just got to work through it. And so that's where it can fail from here. In this space up here, it could fail any time through here. Any breach of this trend line through here would be, well, any move below the 55,000 would tell you that that we're going lower at that point. Okay, so the 8 here as a tested support for the long side, with a classic trading levels pattern sitting here. So we need the first high above the level. And then we can move up from that point, taking that top out, or this one here, and the same on the downside here as well, because if we come down here we're going to bounce off this, and then we may even see 2 bounces and eventually go through there, and then that's where the short trade setup would be on the short side. And when you get to 3, by the way, you always, whenever you're approaching down towards 3, a number 3 anywhere, expect a bounce, a nice strong bounce. If you're lucky, it will just come back to 4 and then move down again from that point. Yeah, well, as you can see, you know, I mean, it's a little bit messy in here, but we've got wave 1 and 2 here, and nice strong 3rd wave, 4th wave and 5th wave here. So that's what we're up against here. So yesterday when we spoke, we were in here, but I noted that it was corrective, so we would go down, bounce off 3 and then come back somewhere close up here. But obviously there's a lot of supply in this little block here for this, all through here. So that's where the resistance is there. But obviously the 58 here is there as well. We can have a closer look at this here in a moment. Have I taken this any further here? Just bear with me for a second. I can't remember what charts I've been working on now. It must be the tick chart at this point. No, I haven't been working on that. So I'm going to come across to back to this one over here again. So we're going to move on to ETH here for a moment. We can revisit Bitcoin in a moment. So with this one here, there's a case here for wave 4 being here as 1 and 2 and 3 and 4 and 5 here for this. And in that case, we would have an A wave, a B wave, and a C wave down here. We can see that that's pretty much struggling on that 18. With Bitcoin, we're looking at 58 with the 8 in, and this one here, the 1800, the another 8 here as well. So it's really struggling from here. Not to say that it can't pop a little higher, but we've also got a very clear 5-wave structure down through here. So we will be at some point moving lower in this case. Let me just move in here to the hourly chart. So you can clearly see the 1 and 2 and 3 and 4 and 5. It doesn't really get any clearer than that. Now the other thing here too is we've got long trades in Ethereum here. So I'm putting this stop just under this low here for that. You could probably also short it here if you wanted to for this. I don't know, you might do something like this, so just be prepared for that, as a B, C here for the A wave, and then some type of B wave happening here. It could be an A and then a B and a C wave here, and then moving up to here, and then rolling over. So just, you know, so in this case here, we've got the A wave, an A and a B, and 1, 2, 3, 4, and 5 for the C of B here, and then 1 and 2 and 3 and 4 and 5 moving down here lower. So yeah, the wave C is the one that's chucked the spanner in the works. It's going to go to the 5-minute chart here. The other pattern here for ETH is this one here, a bit of a long shot. Once again, there is a case for putting wave 1 on top of this one here and having an A and a B and a C here, but this counts better as an ABC here for this one, so I've left it there. So a nice strong third wave here, and a fourth wave coming into play here. But what I've done for the fourth wave here, I'll just sort of show you here, is down for the A wave, up for the B wave, and down for the C wave here. And in this case, I've got the A wave sitting right on the low there. So I just want to show you this here, just so we're on the same page a little bit. So I've labeled the move up here as an A wave, a B wave, and even though we can't see what's going on in here, which is a bit of a shame, but I'm just assuming that it would be wave 1 and 2 in here, and 3 here, and 4 here, and going up for 5 here. So I can count it up as an A and a B and a C wave here for this, which would leave, from B would leave wave C to the downside here. So that means that we'd need to see an impulse wave here, and we're getting one, but as wave 1 and 2 here. And then we could look at this as wave 3 or wave 1, but an A and a B and a C here. So it's valid as a bullish move as long as that low stays in place. Okay, so possible to have a third wave here, an A wave, a B wave, and a C wave here as an expanded flat correction in this space here for this. But once again, this market's struggling at the 18 here, as you know. But it may not be over just yet because it hasn't reached its level up here. But it would need not to move below this one here. So 1, 2, 3, or 1, 2, 3, 4 here, and then 1, 2, 3, 4, 5 coming up here as a fifth wave here, and then back in 3, and then moving up there higher again. So that would be the one to go long on up here for that. Once you get the long trade on Bitcoin, then you'll have the long trade here as well. So in a nutshell, that's it, or that's it really, but it's all pretty confusing. I understand that. So there's a good case for this here as 1, 2, 3, 4, 5, an A and a B and a C coming back here, but that doesn't match up with Bitcoin, unfortunately. It's hard to get those 5 waves up there with Bitcoin. So when I show you Bitcoin again, see in Ethereum there's a nice 5 waves up there, but in this case there's just not that 5 waves up there for Bitcoin. We could look at this as wave 1 and 2 in here, but yeah, just don't get that 4th wave in here. I mean, we get this little one here, but we need that for this one, so it's not there. So yeah, unfortunately, guys, there's and gals, there's a problem because of this 5 wave structure coming to the downside. So there's nothing that there's no sort of there's no preference to being long or short here at the moment for this. Well, if anything, the 5 waves down from the top is a little bit haunting, so that means that we will be coming down. And just to clarify this, we could come down a little way down here as a wave C here, and then move up from that point. Otherwise, if we come closer down to the 50,000, then you'll know that we're going to be taking this low out down here for this. So we'll be back at the 40,000. This is probably, you know, it's hard to be bearish in Bitcoin, isn't it? But you've got to stay with the evidence as well. And the evidence is that this little leg here is much smaller than the previous leg over this down here somewhere. So that being smaller doesn't ring true for me. So this larger correction would ring true for me in that regard. And to help confirm that, we do have 5 waves down from the top here. Now, I've tried to mold and squash and fit, you know, the structure for having a bullish structure in here, and I've done my best with that, and I've showed you that, but that's the best I can do with those, and they're on a bit of a flimsy note with all of that. But Bitcoin being a bullish character, then anything is possible. But if that's going to be the case, then we need that 58,000 as the tested support. At that point, we would see that we would be okay to head up to the 65 at that point. Yeah, as I mentioned before, coming up here, the 62 would be important. I just didn't think it would be that important in this case, but and the 62 is because I work the Fibonacci sequence as a price ratio up the side here, then the numbers take on a bit of a different meaning. So the 62 can really be 61.8, which is probably spot on because it's just a little bit lower than the 62 there. So in terms of geometry, if that's something in charting, then that's certainly a turning point at that point. So yeah, I mean, for me personally, I don't care if we go up or down. Yes, I've got a lot of positions in the market, but coming back into this space here, I don't know, it makes me feel kind of grateful that I get another chance to, you know, bring out the wheelbarrow and fill in that hole there. So that's what I'll be doing. So I'm seeing this as an opportunity here. Of course, it's nice to have, you know, higher prices all the time, but, you know, being able to put more money in the market is something that I'm very interested in. So yeah, that's it, folks. So I don't really have any answers today, but in terms of theory, we've looked at all the different wave counts and looked at it with the crypto index and Ethereum and Bitcoin, and there is a case for seeing lower ground here. So the short people, if you want to short, then that's going to be under the, well, you can find your own way in, but under that previous low just in here, under the 55,000, that would be the safe trade, put it that way. You can enter before that by drawing lines across here or doing whatever you think's necessary. Yeah. Alrighty, thanks for tuning in. Sorry I don't have any answers today, but cheers.